What you see behind me are 9 apartment units. And what most Canadians don't know is that there is a program from the government, from CMHC, called the MLI program that allows you to finance the construction and ongoing ownership of these properties in a very lucrative manner. It is the government's way of encouraging more construction of apartment units. But most Canadians don't know about it and they're not using it. So even in a tumultuous market like we have here in 2025 with higher rates and inflation the way it is, these projects still make a lot of sense. And now you can criticize me, but I'm going to prove it to you by the numbers that this is some of the best investment you can make in Canada right now that beats anything, almost anything, you can put in front of me. Stay tuned for the numbers, they're coming up right now.
Friends, I promised you the floor plans and we're gonna see those floor plans right now. What you see here is the exterior elevation of the 6 units. The building is separated into 2, one 6-unit, one 3-unit building. It was the most efficient way to get this one done. And I'm gonna show you this 6-unit because the other one is essentially identical. So if you can understand this, you'll understand the entire project. So you can see here, it's divided into almost a semi-detached type property with 3 units on each side, making a total of 6. The rear has balconies for both the second and first floor. The basement has some very, very high windows and lots of light, so it doesn't feel like a basement, it's raised up. It makes all the difference in the world for people living on the lower level. Okay, the property is accessed from the front. You can see there's a door right off the front door there, obviously, and that goes straight upstairs to the second floor unit, while on the side, there are 2 doors and you access the main floor right here and the basement right here. So everybody has a completely separate entrance and it's designed that way to maximize privacy and to help people just have their own space because that's what tenants prefer. Okay, this is the interior floor plan. These are the black line drawings as we call them. And I'm showing you the main floor unit. You can see there's a parking spot just in front, main floor plan, 808 square feet. And the access, like I said, is on the side. So you park, you walk down the side, there's a covered porch here, walk right up those half stairs, and you're inside the unit. To the left, you have a big wide open living room, dining area, and open kitchen with an island that walks out to a small balcony for barbecues and whatever you prefer. To the right of the stairway is the sleeping area and bathroom. You can see we have a bathroom. I designed it with a double sink because why not? If there's a couple living there, who doesn't want to have a separate sink? Okay, shower, toilet, a large bedroom with a big closet, okay? And that is the entirety of the 1 bedroom. What's important to notice here is that there is a stackable laundry right here, so they have private laundry, and inside this closet are the utilities. So everyone has their own furnace, their own air conditioner, and they can get to control the temperature of their unit completely independently. Moving on to the upper floor plan. So this would be accessed from the main door right here. So you'd walk right upstairs, you would land on the landing here, come right in, and it's a 2-bedroom unit. On the left, you have a big bedroom, closet, and bathroom touching on the 2nd bedroom on the other side of the bathroom. Again, double sinks leading on to a similar kitchen and living room, big L kitchen, island, dining area, big time living room with a big window that lets in a lot of light with the balcony. And the lower floor plan, which I'm proud of, is essentially a 1+ den because the 2nd bedroom's, so I like to call it a den. And when you come down from the side, you're only walking down a half stair, which is really important because the windows are enormous. You have the living area, kitchen, island, again, similar design that allows for efficiency when building, and tenants love this style of open living, okay? The 2nd bedroom there, more like a den, has its own closet, and then a large bedroom near the front, again with its own closet, pocket door into the bathroom with a double sink. And this is a beautiful floor plan. It's highly desirable by tenants. Again, their own laundry, their own utilities, their own everything, their own private entrance gives tenants the peace of mind and privacy that they want. All finishes are vinyl on the floor, tiles in the bathroom, okay? Quality cabinets, stone countertops, giving the property longevity, giving the property style, and telling the tenants that we like the property, we respect the property, and we expect them to respect the property back. So what is the MLI program from CMHC? I'm sure you know what CMHC is by now. The MLI program is the multi-unit loan insurance program from CMHC. And the program is designed to support the development and financing of multi-unit residential properties across Canada. It helps reduce investor risk by offering mortgage loan insurance, ensuring access to affordable financing for multi-unit projects. The program plays a key role in promoting the creation of new rental units, especially affordable and sustainable housing. So you've heard in the news and you've heard the government parrot this over and over and over again that we need more affordable rental housing. Well, this MLI program was set up to do exactly that. You see, what people tend to forget, and especially the ones that blame investors for some reason for the state of the real estate market, is that the government relies on the private market, us and you, to build and sustain and maintain rental properties for the entire country. The government doesn't do a good job of that, never have, and will very likely never will. So this program is set up to help build, construct more rental properties to alleviate the shortfall we have across Canada. I wouldn't blame you if you wanted to be critical of government programs. I am too, but this one actually works. I have to admit that it actually works. There are benefits for investors and the private sector to build multifamily properties using this program. Let me explain to you. Lower down payments. Let me say that again. Lower down payments. Every investor and private equity investor and the private sector loves lower down payments because it requires less capital. Okay, investors can access financing with lower down payments, making the entry into multifamily investments and construction more accessible. We need more people building more units. Longer amortization periods. That means you have a longer time to pay back the loan. Instead of 25 or 30, CMHC can offer you 35, 40, 45, even 50-year amortizations, which helps keep the debt service payments low and keep the property more sustainable with the higher interest rate environment. The program allows for longer amortization terms, which can reduce monthly mortgage payments and definitely will improve cash flow. Favorable interest rates. I'll repeat, favorable interest rates. Everyone's crying, yelling, screaming at the top of their lungs about the high interest rate scenarios we are in right now. Well, with the CMHC MLI program, you are going to get interest rates that are somewhere between 1% and 2% lower than the average market rate. That makes deals work much better. And as rates continue to decrease, as Canada's bond rates decrease, the interest rate offered from CMHC MLI program will also decrease, making these even more lucrative. Okay? CMHC backing helps investors secure more favorable interest rates from lenders, further enhancing project viability. Now it sounds like CMHC is trying to help investors, and they are, because they rely on the investors to produce the rental supply. And if the numbers don't work, nobody's gonna build it. So they have to do whatever they can to make the project at least somewhat profitable. Because without profit, it's essentially a charitable program. The private sector is not set up to be a charity to build houses for the entirety of Canada. It just doesn't work that way. Now, who is eligible for this program? And how do you get into this program? Do you have to make an application? Is anybody eligible? Let me explain to you how this works. From the property type perspective, essentially it has to be a multifamily type property. It's either a current property or a brand new property that you're building or part of building, and it should be 5 or more units. Remember, they want more units. So it doesn't work on a duplex or a triplex or even a fourplex. They want 5 or more units. They want to bring lots of units into the market, and we need it desperately. Now, who can the applicant be? It can be an individual or a corporation. However you're investing, it's okay. Applicant can be corporation or individual, but the property must be income producing. It can't be a flip type property. It has to be something you intend to hold on to long term. Documentation, folks, I'm not gonna bore you with all the documentation you need. Not only is this a mortgage financing, which you know you need lots of documentation, it's from CMHC, which is a government entity, so you're going to need even more documentation. That's one of the things that, makes my blood boil a little bit, but it is a necessary evil for this type of program. And believe me, the benefits are well worth the pain of going through the documentation process. Now, this might sound crazy, and I'm not one of those people who supports carbon taxes and taxes for climate change and anything of that nature. I think that's insane, and I'm happy to say that here. But there are sustainability criteria you can meet within these construction projects that will help you actually improve the financing you get from CMHC. If you can show that your property meets a certain standard of sustainability with construction, they will give you extra incentives with your financing. If applying for green incentives, properties must meet energy efficiency benchmarks. If your property is 25% or even 40% above the criteria for energy efficiency, above the National Building Code, you will get very good incentives from CMHC. Let's dive deeper into the green and affordable housing incentives because it's important and it's valuable for you to know. The energy efficiency incentives. Investors can receive premium rebates by incorporating green building practices or achieving energy efficiency certification. So they're actually paying you to make your property more sustainable and more efficient. That is a fantastic incentive from the government. I have to give them credit on this one. Affordable housing benefits. The program encourages the development of affordable housing through reduced premiums and extended financing options. I'm doing this exact strategy by offering some of my units lower than market rent. CMHC is incentivizing my project by providing me better qualification and better financing criteria. Government alignment. These incentives align with federal government initiatives to promote sustainable and affordable housing across Canada. Overall, it's a good thing. If you want to spend a little bit of extra money to make your property more sustainable, more energy efficient, CMHC is going to reward you for that, and you will reap the rewards over the long term. How to maximize financing with CMHC MLI program. I'm going to touch briefly on this right now, and then in some of the other segments, I'm going to dive really deep into the numbers and how they work for the exact property that I showed you in the video. So you want to structure deals effectively. Essentially, if you're going to use the CMHC MLI program, you have to plan for it before you even build the property. You have to know you're going to use it so you can plan to have the energy efficiency or affordable housing or certain design criteria built right into the construction. So they work with you from the beginning all the way to the end. And in that case, you need to work with financing partners, realtors, construction workers, contractors, who are familiar with the program, who know how to build what CMHC wants. And if you can do that, you're going to maximize the CMHC MLI program and get the most benefit from it. Friends, I promised you detailed ROI numbers and how the financing works, and this is it right here. I'm gonna break it all down for you piece by piece. Some of the square footage numbers don't align, but I promise you this is the exact numbers. You can see all the 9 units are broken down here, and the rents on average that CMHC assigned to the property, literally they did their own assessment and said, we believe this property will achieve these type of rents, are right here, okay? So even if I told them this rent could be $2,500 or $1,200, they're assigning their own rents because they are the insurer, they are conservative, and they're going to do their own analysis. So you can see the total rents come out to $179,400 per year, and they're getting $50 a month allotment for each parking stall that we have, giving us a gross revenue of $182,760 per year. Like any other property, we're going to experience some vacancy even though it's brand new, so we have to average that in, and CMHC does that for you based on their statistics from across the country. They assign an average vacancy rate here of 2.8%, which we think is very reasonable. It's a brand new property. Property taxes are not even assigned yet on this property. How do they know what the property taxes would be? Now CMHC goes into their data banks and they're using other new construction properties to compare and assign a conservative property tax amount. And they've given us here $18,900 per year. Sounds like a lot, I think it is, but remember, they're conservative. $5,400 a year in insurance, $900 a year in utilities, even though tenants will pay utilities, they gave it to us anyway. Repairs and maintenance, this is interesting. regardless if it's a new property or not, what they say is they're gonna give you $830 per year per unit of maintenance, whether it's brand new or old, regardless. That's their assumption, minimum assumption for maintenance, $830 per unit per year. Caretaker salary, so something like a superintendent, $555 per unit per year, whether you have a caretaker or not, the expense is in here. Management fees of 4.25% of the gross rent. So if you take this effective gross revenue times 4.25%, this is the minimum assumption of management they're going to assign in your expenses, even if you're managing yourself. This is how they make these properties and assumptions on financing conservative, because they're an insurer. Replacement reserve. So this is a reserve they expect you to maintain within your cash flow to replace certain things like furnaces and air conditioners. Very conservative. And just a simple 1% miscellaneous cost for I don't know what, but it's in there. And this is the basics of how they analyze any multifamily property. So let's figure out what the net operating income is here. We take the effective gross revenue, we subtract the operating costs per year, and we get $126,241 per year in net operating income. Very lucrative. This is where it all comes to a head. This is where it all makes sense. This is where it becomes very lucrative to use the CMHC MLI program. They are giving me a mortgage at 91.1, we'll just call it 91% of my total cost to build the property. That means I build the property. At the end, when it's completed and fully leased, I get back, listen carefully, 91% of everything that I spent, meaning that property only cost me 9% of its cost in order to build and now own and maintain for the foreseeable future. Could you get that kind of financing anywhere else? Absolutely not. In fact, this CMHC MLI program says you can get up to 95% of your cost returned in a first mortgage if the numbers kind of jive and qualify based on their data. In this case, I was only able to reach 91%, giving me a first mortgage of $2,141,000. At an interest rate of 4.5%, leaves me cash flow of just under $12,000 per year, or about $1,000 a month. What I find very interesting is that this 4.5% interest rate, even though that's lower than what we would see on the open market, remember CMHC rates are about 1 to 2% lower than the market. So as rates continue to decrease across Canada, this rate's going to decrease for me too. So before I sign on the mortgage, this rate could be in the 4.25, maybe 4, maybe even under 4, which would make my cash flow significantly higher on a mortgage of over $2 million. I want to re-explain the benefit here for people who have not understood and gone through this more than once. It takes a lot of capital to build a multifamily property. You can see here, 91% of the cost of the land and construction represents $2.1 million here. So the total cost to build this 9-unit property is somewhere in the $2.5 million range, right? That's a lot of money. So who in the private sector wants to spend $2.5 million and then get a crappy mortgage of 65% loan to value with a crappy interest rate? Who's gonna build that? Nobody, maybe one person, but essentially not nearly enough to encourage people to build the amount of units that we need. I wouldn't do it. You probably wouldn't do it. And if you were going to do it, I would probably advise you not to do it. If you take the cost of $2.5 million and you get, and the CMHC says, we will give you back $2,140,000, essentially only costing you $360,000 to have a brand new 9-unit multifamily property producing great cash flow at a great interest rate with a great amortization in a good area. Would you take that deal? Yes, you would. Yes, you would, and many people are. And this is only a small example. There are developers larger than me who have a little bit more capital to play with, who are doing this with 40, 50, 80, 100, 120, 200 unit projects in different parts of Canada, who are adding significant amount of units to the rental pool, essentially helping out the economy. This is why the program is there. Now, can you do this on a small scale like I am? Yes, you can. You definitely can. And even if this project sounds like a lot, you can partner with people to make these projects work, because in the end, you only need $360,000 to build a 9-unit project. What you don't need is a $2.5 million up front. You need a little bit of money up front in order to tie up the land and get the financing secured. And once that's done, the flow of money will come from the bank and from CMHC. That description and how that money flows is a topic for another video. And if you want to see that video, I want you to comment below, because it is technical. It will take some time to explain, and it's gonna take a good amount of video production to do it. I'm happy to do it, but I want to know that you want to see it. So comment below and I'll tell you exactly how that works. If you want to get involved in projects like this, and maybe you have 100 or 200 or even a couple $100,000, but you're not experienced with construction like I am, or you don't know the people in the business like I do, well, you could partner with people like me. This is not a solicitation to partner with me directly, although I do this with some people. And if you're interested in that, you can download a copy of my book or contact me directly through the links in the description. I'm happy to talk to you about it to see if it makes sense, right? But you can partner with people who do this and be an equity partner. Take a third, take a half, take a 25% share of a project like this, because the returns are excellent. In the end, you are left with a fantastic asset for today, tomorrow, next year, 5, 10, 20, 25 years from now. It is a brand new multifamily building that's not going out of style, and it will always be in demand.